Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Let's kickstart the Forex trading day, this day before the Thanksgiving holiday in the U.S. So we can expect probably a slower pace of trading. You never know, but let's take a look at the technicals that are driving the three major currency pairs, the euro versus U.S. dollar, the dollar versus yen, and the sterling versus U.S. dollar. Let's start with the euro versus US dollar. I'm looking at the hourly chart and what we see from after peaking up at 1.0964. That took the price above the 61.8% retracement briefly of the move down. I switched to the daily chart, the move down from the high here that was reached in July. That's the 2023 high, and this is the 2023 low that was reached in October. So this trend type move to the downside. We retraced above the 61.8% retracement, as you can see right here at 1.0959, but the momentum cannot be sustained. And yesterday's trading, we moved back below this swing area right through here between 109.25 and 109.43. We started to see rotation more to the downside. Note here that the high price in today's trading did stall ahead of that 25 level. So the sellers are still maintaining control and keeping the pressure on the euro versus US dollar. Back to that hourly chart, which I said we're going to start at. The price decline also took the price back below the 100-hour moving average, but the price action has been higher and lower since the break, with the 100-hour moving average not necessarily acting as a switch in the bias, although more recently we are back below and trading near the lows, in fact making new lows as we speak, and that new low is looking to get below the swing area through here, where we had different swing highs forming this ceiling right through here between this 1.0878 and 1.0887 level. Admittedly, we moved above it on this day, but only to fail and reestablish resistance before moving to the downside. On the move back to the upside, we did break above it and then came back down, tested it before moving higher. So we are back down testing this level and trying to break below it, as a matter of fact. And if we do get below that level, we'll look toward the 50% of this last trend move to the upside. I took the price this way for this current currency pair. That level comes in at 1.08613. So that's the look at the euro versus US dollar from a technical perspective. Let's take a look at the dollar versus yen. And we got within 3 pips of this. This is a daily chart of the high price going back to the March or 2022 that came in at 151.93. The high price last week reached up to 151.93, and then we had 5 of us. Well, let's see, 1, 2, 3, 4 of 5 days moving lower. Yesterday a down day. We closed at 148.39, and the prior day closed at 148.38. So we did eke out a 1 pip gain yesterday, snapping that streak of down to the downside. What we did see yesterday as the price moved down to toward the 100-day moving average. It sniffed it, didn't necessarily get very close to it. It's kind of like this low right here before the market moved higher. We did test these lows, or test and break these lows right here at 147.26. So the sellers gave their good old college try and pushed below that level, but could not get to the 100-day moving average. We are seeing a rotation back to the upside. It's taking the price back above swing levels, including this level right here at the 148.15 level, and then and also we're moving above this level right here at the 148.73 level. So we are seeing a rotation more to the upside here on the daily chart, and that is pushing the pair back above some technical levels. Looking at the hourly chart, we're also trading above and below the 100-hour moving average, similar to what we saw in the euro, except this move to the downside, and the slope of the 100-hour moving average is more pronounced for the sterling versus US dollar. I think the euro dollar 100-hour moving average is moving more sideways. So we are seeing a break above that level, which came up to this swing area here initially, and then rotated back to the downside, and then reestablished bias to the upside and trading above the 100-hour moving average at 149.044. So watch this level in trading here today, as long as the price can remain above that level. It also corresponds with roughly with 38.2 and around the 149 level. So the 149 level is now support in the dollar versus yen. If we do break below that level, we could see, or we should see, further downside momentum. especially after the failed break here. We're trying to break above it for the second time. If it fails above that level, we should see more momentum, or the shift in momentum back to the downside. On the top side, the 50% retracement, however, becomes the next target at 149.53. Get above that level, and the buyers are taking more control. Note here that we're also moving back into this trading range here, which confined the pair over a long period of time here. We broke below it in trading earlier this week, and it looked like the market was heading its way to the downside. But reaching up toward the 50% retracement, that's going to be a key level in trading for both the buyers and sellers. Let's take a look at the sterling versus US dollar next. And on that pair, we'll take a look at the daily chart to start things off. And there we go. The price moved above the 100-day moving average in trading yesterday and extended higher. But today we are seeing a rotation back to the downside. And we are currently trading at session lows and breaking back below that 100-day moving average. There's lots of headlines from the UK budget, and obviously they're taking it not very well here. And that is pushing the price back below the 100-day moving average at 1.2502. That puts us back within or below the 100, but above the 200-day moving average at 124.49. So about the 50 to the 124.50 up to the 125 level is the expected trading range. If the price can remain below the 100-day moving average, that will now be a close barometer for both buyers and sellers in trading here today. If the price can stay below that level, it'll be more bearish. So there you have it. A look at some of the major currency pairs as we head to the Thanksgiving holiday. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.